The Federal Reserve tells us the inflation we are seeing today is transitory. The reality is, inflation has robbed us of purchasing power since the day we were born. The longer you hold on to cash, the more worthless they become. On February 23, 2021, Fed Chair Jerome Powell said that we will have to unlearn what Milton Friedman told us, that inflation is always and everywhere a monetary phenomenon. Well, Powell's comment didn't age that well as we saw the inflation numbers come out on May 13, 2021. Nearly double from when that comment was made, hitting 4.2%. In June, the inflation numbers are out and we hit 5%. And now, in July 2021, inflation numbers are out at 5.4%, the highest since May 2008 and the fastest pace of inflation growth since the 1970s. What does this mean for you? How will a growing inflation rate affect you and your family? I will go over all this and what you can do to protect yourself coming up. Hey everyone, welcome to Campbell's Coins. These percentage numbers are based off of what is called the Consumer Price Index, or CPI. According to the Bureau of Labor Statistics, the CPI is a measure of the average change over time in prices paid by urban consumers for a market basket of consumer goods and services. What the government reports must be reality, right? What if these numbers are wrong? Are the numbers reported being manipulated? Many economists say yes to both these questions. Here's why. The CPI lie. I love that phrase. I taxed this phrase from the great Mike Maloney. He calls the CPI a lie because the Consumer Price Index excludes energy and food in its determination, citing that these categories are too volatile to be lumped in. But there is another category the CPI leaves out: taxes. There are more taxes on items than ever before, and the tax rate is higher across the board than ever before. But the government leaves this out when determining your purchasing power? How can they accurately determine how much people can buy or not buy when they are taxing us to death on nearly everything? Or when our energy and food costs are constantly growing? This isn't the only problem. In the early 1980s, the Bureau of Labor Statistics changed the methodology for calculating the CPI. They wanted to tweak headline inflation, and what they did was they were taking out housing costs, specifically the cost of buying a new home. The government redefined this from measuring actual cost to measuring homeowners' equivalent rent. Basically, what a homeowner would pay him or herself to rent the house to him or herself. The inflation number for this definition would be based on what the rent increase there would be each month. As you can see, there are many problems here. Not everyone's rent rises each month, and homeowner costs are very extensive. Switching to this definition knocked out about 1.5% from the total aggregate inflation. As time went on, more changes were made to CPI. All of these changes are cumulative. These changes were politically incentivized. It reduced the cost of living adjustment and kept the budget deficit lower. These changes were made as political favors. Change these definitions and we can boost your budget. A rising inflation rate doesn't bode well for the administration in power. And since the economy is strictly a confidence game, the longer they can keep the con going, the longer the public keeps its cash in the system, thinking everything is going well. When the government removes rising priced items from the CPI to keep the average down, that is clear manipulation. You might be asking yourself, big deal, this doesn't harm me. Why should I care? More than likely, it affects you, and quite negatively. Unless you're a millionaire or a billionaire, you're feeling the effects of inflation. It's a tax on the poor, it's a tax on the middle class. The truly wealthy aren't affected by inflation. The reason this affects you is twofold. First, you simply don't have extra cash to make up for the rising prices. So you are either buying less of an item because you can't afford more of it, or you're not buying it at all. Second is wages and inflation. According to multiple economists like Frank Holmes and John Williams of Shadow Stats, the real inflation rate is around 12 to 14% in 2021, not 5.4%. 12 to 14% doesn't affect millionaires, but those who are already on a strict budget. This increase significantly hurts them. Maybe you got a 3% raise this year. Too bad the cost of goods and services is up 12%. And this 12 to 14% is just an average. Some goods and services are up dramatically more from last year. I'm sure I don't have to tell you this, but pricing on everything is up. From education, healthcare, housing. Lumber was up 250% from this time last year. It has since subsided, but it still was quite high. Coffee is up 50%. Grain prices are climbing and will continue rising through the rest of 2021. Grain is practically used in everything, which means most food prices will continue climbing. Have you purchased gas recently? That's up 50 to 100% across the US. Used cars are up 25%. Some people have been able to sell their used car for more than what they bought it for new. John Williams, the founder of Shadow Stats, uses the near original CPI before it was changed in the early 80s to track the inflation average from then to today. This is what the chart looks like. You can clearly see how the graphs diverge when the definitions changed. Is this inflation transitory like the Fed states? For those who don't know, transitory is akin to temporary. Temporary here and it will be gone soon. The Fed believes prices for items are high right now, but will go down as soon as we see supply chain issues fixed. Well, that is what they said a couple months ago. I'm willing to bet they are sweating it a bit as the new numbers came out. They are really hoping they subside soon, but many people think inflation will keep rising. I think as the current administration keeps pumping currency into the economy, the more we will continue seeing inflation climbing. You might be asking yourself, why is all this happening and what can I do to protect myself against this garbage? These high prices are coming from money printing. It's basically the only thing the United States is good at, printing paper money. For the majority of the history of this country, our dollar was backed by this: gold. But in 1971, President Nixon took the United States off the gold standard. This meant the US dollar could no longer be converted to gold by countries returning dollars to us. This ended a 30-year monetary system dubbed Bretton Woods. Bretton Woods was a meeting of 45 countries in which they all agreed to keep their currencies fixed, but adjustable in exceptional situations, to the dollar, and the dollar was fixed to gold. The gold standard ending didn't affect US citizens much, as our ability to convert dollars to gold was eliminated by Franklin Roosevelt in 1933 when gold was made illegal to own by US citizens. Thankfully, Nixon eliminated this ban on gold ownership in 1974, but he didn't reinstitute the gold standard. With the dollar no longer tied to gold, countries including the United States have set their money printers to infinity and haven't looked back. When a country doesn't back its currency against anything, they can print as much as they want, and it's not worth anything above the value of the paper and the ink used to create it. The United States printed 35% of all the currency is ever made in the history of the United States in just 2020. You heard me correctly. We managed to print 35% of all the currency ever made in this country in just 1 year. This is including all previous wars, all of that, 35% in just 2020. It's an astounding number. And previous numbers were not low compared to last year by any means. Every 8 years, the US seems to double its debt. I have covered the amount of US money printing in this video, which really highlights the scale of it. I have it linked down in the description below if you care to see it. We have seen what happens when a country prints its currency into oblivion. Weimar Republic Germany, Zimbabwe, Venezuela, all have hit hyperinflation where prices on goods change on a daily basis. Will we have higher inflation? If the last few months were any indication, yes, we will. I think the Fed is really sweating it out right now because they have zero recourse at the moment. If they raise rates to halt inflation, they risk stalling the economy and crashing it. The economy is barely hanging on after the last cash injections. It's more of a zombie economy after 2008, kept alive with cash injection after cash injection. Raising rates would also royally screw this nation over. You think your debt is bad? It's nothing compared to the United States' $28 trillion debt level. Imagine paying just 2% on $28 trillion. That's a doozy of a number in just interest. What do I do to protect myself from all these woes? I don't tell people what to do. Instead, I tell them what I would do. I take my currency out of the banking system, out of the stock market, and I buy physical gold and physical silver. Physical silver is my long-term investment / hedge against inflation. The same goes for gold, but I buy gold more of a hedge against inflation than anything else. The reason I do this is because these metals have held purchasing power over time. The amount of gold needed to buy food for a month is roughly the same in the 1930s as it is today. This can be tracked back to Roman times. If you're interested, check out the other videos I have on my channel discussing the rarity of these metals and how they can help you preserve and protect your wealth. If you made it this far in the video, you guys and gals are my super stackers and collectors, and I appreciate you. Thank you all for watching. This is Campbell's Coins, and that is my 2 cents.